All right, it says I'm live. I'm trying new technology here because when you're small and building a business, you have to be able to improvise and pivot when other technologies don't work. So check this out. Check out the new layout. See, like over there. No, wait. Over there. There it is. I got the Mortgage Money Genius logo, got the Mortgage Money Genius there. And then if I go up, got that, and then got the TV. Okay, this is working. All right. What's up? Mark McInerney, President, CEO of CodeMark Financial. Welcome to Mortgage Money Genius. In here, we teach home buyers, homeowners, real estate professionals, all the ins and outs about the mortgage industry as well as the loan process. So all of you guys can have a successful and smooth real estate transaction. We have been taking you through a series, and I figured I would do things in bite sizes and then do a recap on the bite sizes before we move forward. What have we been talking about? Pre-qual versus pre-approved. What are the differences? What are the pros? What are the cons? Let's recap on that and take a look at that in just a moment. 3, 2, 1. Off we go.
I just wanna be your superstar, 'cause it's not where you're from, it's where you are.
All right, so I think that puts me back in there. Again, we're just going to do this trial and error because you know what? Nobody has ever succeeded without failing first. So we'll see how it looks. All right, pre-qual versus pre-approved. Very simply, my friend, let me see if I can leverage exactly what I was hoping to do here and share my screen. And let's just take a look and see what this says. Bang. All right, I presume I am on there. Pre-qual versus pre-approval. These are the 4 components of what it is that one is going to need to kind of determine one or the other. Just know this, that pre-qual, short for pre-qualified or getting a pre-qualification, is going to be done in a rather verbal manner, okay? And when I say verbal manner, that is literally one just saying, hey, this is what I think my credit score is. Roughly, of course, this is where my income is. This is the down payment that I've got. And then a loan officer would be plugging all of these 3 details into a loan software as they're having that conversation to be able to capture some, let's see, there we go. Capture some of the details to figure out what the qualification numbers actually look like. Now, let me go back and share my screen here. And as I said, the difference is kind of verbally sharing it because, you know, not everybody is in a position when they call to get pre-qualified to have like access to, you know, either, you know, computer, even being on their phone, especially if they're driving, you know, a lot of these things with people multitasking nowadays, much of the times when somebody's contacting me to get pre-qualified, I might be driving, you know? So in saying that, as I said, it's a form of just kind of saying these things verbally versus proving it, my friend, right? Got to coordinate. And in coordinating, what do we mean by that exactly? Well, hang on a second. Let me dive right into this again. I might just have to kind of show you this way. As I said, here's what we're looking at in terms of the pre-qual, right? This is best case scenario. If the credit gets pulled, right? You know, like we're able to look at the credit report. That's going to give us a pretty good bill of health of what's going on, right? I like to call it, it's like the x-ray. We get to see what credit scores are. We get to see what revolving debt currently exists. And then when you input the rest of these details, the income, the down payment, we get a calculation that tells us the DTI or that debt to income ratio for giving us that rather loose qualification. Now, again, any and all loan officers are going to be able to ultimately say, this is what this one would look like based off of certain loan programs, the debt to income ratios, where the credit scores are. You can actually get a pretty good dial in also on the assessment of what your mortgage payment would look like. Again, you know, taxes and insurance. We'll just kind of give a bit of a loose example. And then also, you know, what an interest rate might look like, especially once one gets a chance to look at a credit score. The last piece, as I was showing here, was basically proving this. And that's all the difference is, my friend. Arguably, the credit would already be pulled. And in pulling the credit, well, what would you have? You'd have the credit report. Now, somebody says they make 100 grand. Okay, great. How do you prove that? All right, well, go ahead and get us, you know, the W-2s, the paycheck stubs, you know, the down payment. Where is that money coming from? That money is coming from ultimately some sort of account, right? So where is that? Prove it. Show some bank statements, show a 401 statement. Again, wherever that money might be coming from. And then that gives a really dialed in component here of what the true debt to income will be, because now we're dealing with the ones and the zeros and the pennies and the nickels on just about everything. Again, so look, pre-qual, credit pulled, verbally disclosing the income, verbally disclosing, what one might have for a down payment, gives a loose calculation because these numbers are still the variable piece for what the DTI would calculate at. Pre-approval is, again, the credit is already pulled. Doesn't mean you are pulling it again. And then you are supplying the details around ultimately what the income and the down payment one actually has for all of this. All right. Okay, cool. Now I get to see what that ultimately looks like. So that's how that's done. Learning every time. All right. Okay. Well, now that I know this, now maybe the next show will have a little bit less of the tweaks. Okay. That's all I got. I tell you what, now that I've got this great new software, this is how I'm usually delivering loan estimates, to someone. And usually it's kind of one way, just like this too. I don't know who's watching, and I don't know when someone is going to be watching this, including yourself, but it's directed as if the information is there kind of as what they call evergreen. So I'm going to start showing what loan softwares and plugging real numbers actually look like online, live. So here's my request to you. If there is an actual scenario you would like to see what you would get pre-qualified for, send me an email, message me, send me, like, comment, share on this, send me a direct message inside of Facebook or, inside of YouTube. This is also posting to our YouTube channel too. What I can show, and we'll promise, of course, to keep this discreet and, anonymous, is I can say, look, we had somebody reach in. This is the price point that they were interested in. They were interested in a $350,000 house, putting 10% down. Here's how we calculate these things. So you want to see what it looks like behind the curtain, what's basically taking place, and see what those numbers look like? Fantastic. I'll do you one better. We'll even go on and show you what pricing looks like, so you can get an idea of what true interest rates look like based off of different credit score tiers. I think I'm going to really enjoy this software. I hope you have too. As I said, thank you so much for tuning in. Like, share, comment. And if you're just tuning in, make sure that you go back and watch what I just said if you want to see a live example of what a loan scenario might look like for you. And again, of course, completely discreet, not saying who you are and all the rest of it. But if you want to see what numbers could look like, hey, it would be helpful for everybody else that might be looking to qualify for either a refinance or a purchase inside of your price range. I'm Mark McInerney, President and CEO of CodeMark Financial. This is Mortgage Money Genius. Thanks so much for tuning in. Peace.